benefits, misconceptions, process, the VA loan assumption. Bum, bum, bum. Hot topic right now with high interest rates. Let's talk about the pros and cons of the VA loan assumption and how to do it. Welcome back. I'm Charlie Cameron, Air Force veteran and leader of the Military Home Team, the top-rated military-first real estate team serving the Florida Panhandle and the bases around it. If you are looking for awesome content about VA-related buying, selling, or real estate in the Florida Panhandle, you've come to the right place. If you want to learn about the top places to live in the area, top things to do, all sorts of ins and outs of the bases and military activities, as well as just general living on the Florida Panhandle, be sure to follow and subscribe to our channel. We're going to have lots of great content for you. If you get some value out of this video, please like. Let's get into it. Okay, let's talk about the VA loan assumption for buyers. Hot topic right now with interest rates so high. So obviously that's one of the big buyer benefits, but we'll talk about a couple more. We'll talk about the two biggest VA assumption misconceptions I bet you didn't know about. And then we'll talk about requirements to assume the VA loan, the process and timeline, biggest issues with the assumption and how we go about mitigating those as a real estate team, what happens if the loan isn't approved, pros and cons, basically a summary of everything we talked about, and then our VA loan assumption success I just want to mention for a second. So we're the Military Home Team once again. We're the top-rated military-first real estate team on the Florida Panhandle, serving all the bases on the Panhandle. We're happy to help. You can reach out to us any number of ways or check out below. If you want to learn more about the VA loan in general, you want to learn about the VA buyer process, you want to learn about the VA addendum, the different types of Florida contracts, I put together a ton of videos for our clients, and we put them on YouTube to educate folks on how this all works, because we want you to be in the light and not the dark on everything that happens on the Florida Panhandle when it comes to real estate, especially for our military members. Closing costs videos and stuff are in there too. So a whole bunch of stuff. Buyer benefits to a VA loan assumption. So it's yesterday's interest rates. We've seen them in the threes, even twos. Your payment could be hundreds to thousands of dollars less a month. That's crazy, right? So that's the big benefit. But there's also lower closing costs. There's a lower funding fee. It's partially paid off, which also means the loan duration, some of the loan duration is behind you. Say the homeowner's owned it for 4 years. So there's going to be 4 years less in your loan duration. It's going to be 26 years, right? So that's kind of cool. You don't have to have the loan for that full 30 years. Not that you have to pick a 30-year loan, but the vast majority of people do. So the two big VA loan misconceptions is, one is you don't have to be a VA qualified buyer. Anyone can assume the VA loan, but the seller may want you to be VA qualified, and we'll get to that in a minute. And then there's no appraisal required, which makes things a little bit easier, right? And then for the VA, if you go look at the VA addendum video, there can be repairs required by the VA appraiser, and so that's not going to be the case in this situation. Now, due to VA entitlement, right? How much home you can buy at zero down, essentially, is what that means in a nutshell. The seller may require you to be a VA buyer who takes over their entitlement. Selling their home with a VA loan that's assumable, but to someone who's not a VA buyer, then the entitlement that they used on that home, let's say it was $300,000, they now lose that much entitlement when they go purchase their next home until that loan is gone, or until somebody else picks up the entitlement on that loan. So that just means that they're going to have $300,000 less of VA entitlement buying power. There's no limit on how many VA loans you can get so long as you can qualify for them. It's just the entitlement for zero down, there's a limitation there. So you'll still be able to go buy a home, and the entitlement, of course, changes by what location. So it's a little bit complicated. You want to talk to a lender for that. I can hook you up with one if you need it, but they may want you to be a VA buyer. So in most cases, the seller is going to want you to be a VA buyer and to take over the entitlement for that loan. So for you to say, yes, I will use some of my VA loan entitlement to take over this loan. And the seller is going to want a release of liability approval from the lender, which in the vast majority of cases is going to be absolutely approved because there's a new buyer taking over that loan. But essentially that means that releases the seller from ever being liable for the new buyer not paying their loan, right? It's just going to be the new buyer is responsible. So those are kind of two stipulations the seller is going to want to see most likely. Now, requirements for the VA loan assumption. 5 essential requirements. The loan must be assumable. So even though it's a VA loan, it's not always assumable. You got to call your loan servicer to find out. The seller must approve of the assumption. So they've got to decide that, yes, I want this to happen, and I'm going to tell my lender that it is okay with me. The third is that the buyer must be able to qualify for that loan amount. So you're going to be qualifying with that new lender, with the existing lender, and so you're going to have to be able to qualify for that amount of home. You can't just be like, well, I'll do an assumption so I don't have to qualify for a lender. Now, you should, if you're shopping for homes, already be qualified with a lender, so you should know generally how much you could qualify for. However, number 4, the existing servicing lender is going to have to qualify the new buyer for the loan. They may decide to add on some additional requirements that a normal VA buyer wouldn't see. We'll get to that in a minute. And number 5, you do still have a 0.5% VA funding fee to pay. And because the loan is already in existence, you can't tack it onto the loan. So in a normal VA loan, you would have a funding fee, unless you're a disabled veteran or some other scenarios there, but you would have a funding fee, and that would just get added to the loan amount. So you wouldn't actually, you'd see it on your closing costs, but it wouldn't be part of your cash to close because it goes into the loan. In this case, you're going to have to pay a 0.5% of the home value VA funding fee, and it's going to have to be paid at closing. So like on a $400,000 house, that would be $2,000 to assume that loan. So here's the general process. Before the contract, we have to verify that the loan is assumable, and the seller needs to authorize the assumption as soon as it goes under contract, as well as you as the buyer would have to complete the application with the lender as soon as possible, because it's a long time potentially for approval. So it can take up to 90 days is what the lender will quote, once this stuff is done, to go through all the required documentation, do the lender review, do the assumption approval, put you as the buyer through underwriting, and then issue a clear to close. So that can take quite a while, and this makes sellers a little bit nervous, right? And we can't say up until the end of that whether you'll be approved or not by that lender. Now, if you can get approved by another VA lender for the same loan amount, it's highly likely, but it's never guaranteed. So here's some issues we've seen with a VA loan assumption. Issue number 1, it's a super long timeline. It's 2 to 3 times a normal contract, which of course sellers don't like. What we do for our buyers is we'll write in a forced extension. So essentially, as long as we are required to wait for the VA loan extension or VA loan approval process, then we require you, Mr. or Mrs. Seller, to approve any extensions throughout that process, right? Not for any other reasons, but to extend this through. You don't want to get caught without this as a buyer, because we've seen it before where a seller will start to get cold feet. This is taking forever. We don't want to do this. We want to put it back on the market. Too bad. We have a contract. So you want to make sure that that's in the contract. Another issue we've seen, of course, is now let's say the home price is $400,000, but the loan amount is for $350,000. Well, that cash to close has to come out of somewhere. Okay. So you have to pay that difference of $50,000 one way or another. Typically, it would be cash out of pocket. I've seen a scenario where a HELOC was done, but that cash to close difference has to be placed, and you typically cannot get another mortgage to cover that. So that's kind of a downside there. And it's a downside as long as interest rates remain high, right? Once interest rates drop again, you could refi and get that money back out if you wanted to. So the solution is we look for low cash required. So maybe they haven't been on the last time the home sold was not that long ago. So the equity appreciation is not too huge. So we're looking for more recently issued loans, and we could ask for some seller concessions, though there's some limits there as well. The last issue we see is the lender doesn't approve the buyer. It can happen. We can't necessarily predict with 100% confidence that you're going to get approved. So the best option here is to ensure you are qualifiable up front by maybe qualifying with a different lender if you're shopping for homes. And then we ensure that we have everything baked into the contract so that should you not get approved, you can walk for that reason and not lose earnest money, right? Since it's not a guarantee, like we don't ever plan on this being the scenario, right? But this being the scenario where the seller might decide to walk, but we always bake it in just in case. Right? We want to make sure you're covered should it happen, even though it's less likely. So what happens if the lender doesn't approve the assumption? Unfortunately, there's no big incentive for the lender because they're not issuing a new loan, whereas where they make the majority of their money. So we've seen them be weirdly restrictive at times with additional buyer qualification requirements than with a new origination. So if you're not approved, it's important that your agent writes in the contract that you can walk away without penalties, we just talked about. You can still, though, bring in a VA lender to issue a new loan. So you could still buy that house it's just going to take, hey, now it's going to take a 30-day typical process. And, our lenders could probably do it much shorter if they had all the paperwork very quickly, but you do have that option, or you can walk and find a different option. Now, VA loan assumptions, even though it's that kind of market, are not super common. So I encourage you to, if we have to walk, it's not going to be like, oh my God, let's go find another VA loan assumption with the perfect house. Doesn't always match up. So just keep that in mind, right? We want to be real. We had a successful loan assumption very recently. So we're one of the very few teams in the area and the Florida Panhandle that have navigated this assumption process successfully. At interest rate, oh my God, 2.25%, right? When interest rates are 2 to 3 times that. Anyway, we've done it. We've been there. We know how to do this. You know who to call. And just the pros and cons summary. Don't know what happened to my video there, but pros: lower interest rate, shorter loan duration, no appraisal, don't have to be a VA buyer. And I missed a couple. Lower closing costs, and what else? I think that was it. Cons: larger cash to close, of course, 60 to 90 day timelines. You want to make sure you're protected as a buyer, and that's built in. The seller's going to want to see VA eligibility and liability release letter, most likely, and the lender doesn't have to approve at the end of the day. So pros and cons. Personally, for our VA buyers, I would absolutely try, because the interest rates are, 2 to 3% interest rates versus today's. Absolutely worthwhile to give this a shot. And there are some properties that will be marketed VA loan assumable, as well as some where they may not be, but we can ask the question, right? So just keep that in mind along the way. If you have any questions, call us, hit our website, hit our QR code, search for Charlie Cameron Military Home Team on Facebook or Google, you'll find us, or check out the information below. We would be happy to answer any questions you might have. Thanks for watching. If you got some value out of this, I got a favor to ask. Please like, please subscribe. We got a bunch more content to help all sorts of buyers and sellers in the area, especially our military veterans and active duty members. And if you need help whatsoever in buying and selling a home on the Florida Panhandle, please reach out to the Military Home Team. We're here to help. Our info will be below. Cheers.